Hello, my name is Jody Samuels with FXTradersEdge.com, and today we're going to talk about a high-end analysis tool that may be difficult for the little guy, yet it's the cornerstone for the big banks and institutions, and that's Elliott Wave Analysis. Elliott Wave Analysis is responsible for some of the most accurate market reversal and continuation predictions. And that's because the markets are fractal in nature and they repeat themselves over and over and over again. So it's a question of internalizing the market patterns and then applying them over and over again depending on what time frame you're trading. Now what we're going to talk about today is an amazing revolutionary method that uses a top-down approach with Elliott Wave Analysis to identify the waves without actually counting the waves. Does that sound like an oxymoron where you're using Elliott Wave Analysis in a method and you're not counting waves but you can see the structure of the waves? That's just incredible to me. So it's a system that points out the waves. Let's just start with this diagram that I love to use in all of my courses. And it's called Trading the Market Cycles. This is the Elliott Wave market cycle. You know, currency pairs and really any market moves in cycles. And at each point in the cycle, the pair either moves up, down, or sideways. So this is the typical 8-wave cycle, the trend followed by the correction. The 5-wave trend followed by the correction. So the trend starts at point 0 and it ends at point T. There are 3 types of strategies that a trader can use. The end of the trend trader strategies at market tops and bottoms, sideways strategies, and the trend strategies for the trend moves. Now we're going to show this revolutionary system, and we're going to name this system. The system is called the Wavy Tunnel. And there are 5 trades in the Wavy Tunnel. There are 3 trend following trades called the breakout group, the breakout 1, 2, and 3. And there are 2 end of trend trades called the PW or price the weight and the fill the gap, the FG trade. So you trade these trades at point 0 and point T for the end of the trend, and during the trend you trade the breakout trades. Every trading setup, all of these 5 setups have an entry point, an exit strategy, and a stop loss. The exit strategy includes the stop loss and the profit taking levels. It's just an incredible, incredible system. And I want to show you what the system looks like in just a minute. But before we look at a live example of the EURUSD, let's just ask some questions and answer these questions. Why does the Wavy Tunnel use 5 trades? And that's because, we've already discussed this, the market offers different trading opportunities depending on what part of the market cycle or Elliott Wave pattern we are in. And the Wavy Tunnel tunes our visual sense to find the trend trades and the end of the trend trades or the trend reversal trades. So with the Wavy Tunnel, traders will be able to profit no matter what part of the market cycle we are in. It's just fantastic. Are there specific rules to follow with the Wavy Tunnel? Absolutely. Wavy Tunnel trading is a methodology which has rules. It's designed to be used to follow the rules without emotion. And that goes without saying for any trading system or trading methodology that you use. You must define the trade plan to avoid emotional trading. Most trades are unsuccessful when they don't have a trade plan or when traders don't follow it. So learn the rules, follow the plan, and practice, practice, practice to internalize the Wavy Tunnel setups and to internalize whatever system you are trading with. Now let's look at the EURUSD. This is a 12-hour EURUSD chart. Now first let's look at the wave count. You see that we're in a wave 3. We're in a wave 3, and let's just look at some projections. This is the initial wave 1 and the wave 2. So if we take an extension and measure if we project wave 3 against wave 1, we come up with various targets. Now, the first target that we mentioned a few weeks ago was the 161.8% target at this price right here, 126.57. We reached that target, the market rebounded, corrected up to the 128 level, and then resumed its downtrend. After 161.8%, well, the next target is 200%. We reached that target, blew through it, and the next target is 261.8%. And that would bring the euro down to 122.70. So at 261.8%, that's an extended wave 3. Now, wave extensions can seem like they go on and on and on ad infinitum, but in fact, there is a limit to the extensions. And so far, in this move down from the end of wave 2, the beginning of wave 3, we have 19 waves. So we're looking at 2 more waves to complete the cycle, a wave 4 and a 5. And if wave 5 has 5 waves within, then we're looking at an extended wave with 25 waves. So this wave 3 isn't over yet. It's close, but it's not over yet. That's what we need to point out. And it's a very, very long extended wave 3, and 261.8 is, that's definition of a wave 3 extension. At 161.8%, that's a normal wave 3. Now let's look at the wavy tunnel setup in using this context, using this background. So the wavy tunnel setup is a set of moving averages. As you can see, I'm not going to go into all of the trades here, but I will point out that the wavy tunnel has kept a trader in the trade the entire move down, in the wave 3 move, the entire move down. And the other thing that I want to point out is the awesome oscillator. This is key to the wavy tunnel setup. The awesome oscillator, it's a 534.5 MACD histogram, and for the duration of the wave 3, the awesome has been below the 0 line. So it's been below the 0 line, and until we move back up above the 0 line, there's no reason to expect the euro to turn around right away. But we do have to watch for the awesome to come back to the 0 line. And that would most likely be in a wave 4 correction. So once this wave 3, this orange wave 3 is complete and we correct for the wave 4, that is when we will likely see the awesome coming back to the 0 line. So that's all I have to say for today. And happy trading, and see you next time. Thank you very much.